Xin chào, ladies and gentlemen. I'm very happy today to have an opportunity to present about the met coal for the Southeast Asia region. So I believe that all of you here very well. We all safe and sound through this unprecedented COVID pandemic situation. And thank you for your time. So let me start first with our presentation slide. So many people heard about Southeast Asia, and many people also have a business with Southeast Asia. I put here Southeast Asia Steel overview. So in very short, so people can catch up the key point of Southeast Asia Steel to date. So for the capacity of the Southeast Asian steel, what I have collected from the statistic on the seaside, the current is around almost 19. Actually, it's 89.4 million metric ton of all steel production capacity, included both the BF and EAF. One thing is more important that second round, you see that Southeast Asian steel have a very strong and stable growth in the coming decade until 2013. That we will have a planned addition of 61.5 million metric ton. So in the coming 10 years, by 2030, we will have a foreseen of 150.9 million metric ton on the plan and in the pipeline. So Southeast Asian steel, the reason and the main driver for all of these steel growth, I can put into three words only. The major main and of the motivation and driver for this steel growth is the investment coming both from the government, what we call here the public investment, and also from the company itself, or the other is a private investment. So millions of dollars and billions of dollars is poured into the infrastructure, pour into the factories, pour into all of the industrial projects that have the demand of the construction material, majorly for the cement, concrete, and steel, increasing sharply in the coming 10 years. However, the last round you see that I want to view about Southeast Asia is the challenge in this development, all related to the China policy, China development, and China trade behavior to the region. Because we are next to China. All the challenge, think about the development related to China. So it is all about the Southeast Asian steel view, and I put in these 5 rounds. So hopefully it can make you clear about before we can step into the detail. So you hear on my left that I put a breakdown of the key country current steel production capacity. See the Vietnam with more than 20 million, Thailand is more than 24 million, Malaysia 15.5 million, Singapore with a minority of 800,000. Indonesia currently more than 20 million, similar like Vietnam. And Philippines coming with 7.7 million metric ton. And as I mentioned in the previous slide, the reason we're going to add on more than 61 million metric ton, excluding Myanmar and Cambodia. So your foreseen is a breakdown in the coming future. Vietnam will become the largest steel producer with almost 40 million metric ton. Thailand, not much change, keep stable at 24 million metric ton. Cambodia, new player with 3.2 million metric ton. Malaysia also going up fast with more than 26 million metric ton. Indonesian runner-up with more than 33 million metric ton. And Philippines coming up with a very sharply increased steel production, more than 25 million metric ton. So the changing of the steel capacity in the Southeast Asia in the coming 10 years is very significant, very significant. So as usual, we're seeing who is the main supply source for Southeast Asia and what can be the new factor. For the met coal, and we put here is 4 major type of the met coal. First, on the anthracite, Russia will be the biggest name and the key player because it's the geography and also rich reserve anthracite of the country itself. On the PCI, we see 2 main players, but Australia will be dominant and then follow up with Russia. For the hard coking coal, both the premium and also mid and LV. Australian is the major one, and plus we have some cargo that transport from Mozambique to the region. The lowest grade, what we often call a semi-hard or semi-soft coking coal, is majorly coming Australia, and Russia are giving a smaller part to that, and Indonesia coming out with some new project, and hopefully it's on time. One interesting thing I want to say here that so far the North American supplier, I'm talking about United States and Canada, what is the possibility? What can be the trade volume to the region? All people know that thanks to the China ban on the Australian coal import recently, so United States and Canada taking much of the advantage by moving the met coal to China as an alternative for the Chinese steel mills. But when it's over, we believe that US and Canada definitely look into the South Asia very seriously. The proof that the Canadian coking coal often moving to Vietnam 2 years ago, around 500,000 metric ton, amazingly to one of the two biggest steel producers in Vietnam. And also they have some aggressive approach to the Malaysia as well. United States also touching to Vietnam, Malaysia and Indonesia market. And we believe that very soon after this China and Australia dispute to settle out. So that'll be more aggressive to seriously looking into Vietnam's. I put here on the supply side. So we can see that in this data from last year during the COVID time. So the met coal export to the global, we see that Australian is the biggest player with more than 173 million metric ton, and followed by the United States, Canada. The other two players, Russian and Mozambique, also add on the global met coal export. And more or less, this supply pattern will apply similarly to the South Asian when it's come. I have a small note here on anthracite. The Russian seems like a champion and almost no rival. So they're almost dominant with this more than 24 million metric ton for the global market, and because of the quality and because of the rich reserve as mentioned. That is from the supply side. We are going to the next slide with the demand from the South Asia market for the met coal. We have a lot of data and fact and figure, but I want to put in very brief here the typical characteristics of each country in terms of the import. So Vietnam will be a very big name for the met coal demand because Vietnam is 100% net importer, and we still is a net importer in the coming 10 years and even longer after that. Indonesian keep importing the met coal for the blast furnace, which invested by the China and also by the government company. Indonesian also have some met coal mine, but it is small volume and cannot meet all demand in the country. So, but we can put that the Indonesian like both import and self-supply, but import will be majorly. Malaysia have a very high potential of import, but it seems that is expansion of the capacity is 50-50. The current blast furnace project is facing a very strong local resistance due to something related to the environment, political, and socio-economic issues. Cambodia, quite new young player with and the blast furnace project is 100% control from the Chinese mother company. So we believe that all the procurement will be controlled of China itself. Myanmar came in the map with a very aggressive two blast furnace, but moment the country is under the fire. So we see no future now, and we don't know what the country is going in coming years. I put Philippines separately because if all as planned, Philippines coming into the region with a very considerable player, and it's also 100% importer like a Vietnam with the capacity of steel production is around 18 million metric ton. So more or less we are talking about the met coal, the demand of more or less 10 million metric ton per year. The demand for the P-side itself in the met coal sector also coming very sharply from 2 million metric ton in 2018 and estimated 7 million metric ton in 2030. I'll let you to in a little bit more detail. The blast furnace projects is we're talking about the steel blast furnace because some other than nickel, so can using some metal, but the volume is small. The first with Vietnam, Huafat is a very successful company since 2020 until now. They just completed the first phase of the Huafat Dung Quất Steel Complex plant. And immediately early this year, the management of the group declared another investment of 5 million metric ton blast furnace on the second phase. So upon completion, the group will have around 12 million metric ton steel capacity production. Formosa, since early last year, they keep following up with the new expansion of 7.5 million metric ton, but due to some internal reason, it's not confirmation yet to the public. Hoa Sen, one of the star of the steel producer in Vietnam, they have project of 10 million metric ton of blast furnace, but also due to some process of licensing and environment issues, so the project is delayed, but we don't know whether it can come in very soon. On the Malaysian side, so we have Eastern Steel add on 1.3 million metric ton. Wenan Steel, very huge project with 10 million metric ton. Alliance Steel, 3.5 million metric ton. So Malaysia also very considerable to add on the BF steel production capacity and one of the destination for the Medco in the futures. Indonesian, it's the largest population country in Southeast Asia. And we are seeing that the Krakatau Bosco already moving on with a 1.2 million metric ton and additional 4 million metric ton. The other Chinese behind investment in the PT Desin in the capacity 3.5 million metric ton, and the government group, a government company and private joint venture Gunung 1.5 million metric ton, as it is to be affirmative. But Indonesia definitely was one of the key players in Southeast Asia for the Medco. Philippines, as I mentioned before, is a very big question. But when they came on the stream, we have a Steel Asia and Herbite groups project with the design capacity 8 million metric ton, and they even put the deadline of the project in 2026. Another Chinese invested in the Philippines, the Panhuo is also put a huge capacity 10 million metric ton, but no further news. Continue update today. Company is seeing the investment from the Pao, one of the China's largest steel producer, 2.1 million metric ton. They're moving the old blast furnace from to Cambodia. Myanmar, I just put here, but we never know the future in Myanmar until now. So before you leave for the presentation, one thing I want to repeat again, but I believe many people also get about the China impact on the South Asia. So of the almost 60 million metric ton of the major carbon steel production capacity planned to come on stream in the next decade in this region, so we'll see almost 40 million metric ton, 39.4 exactly, will come from the Chinese-led projects. It's a data static from the seaside. Oh, China is a big impact, both physical and also on the trade market to South Asia. It's from the beginning of the process procurement until production. So for this, we see here is Australian finding now South Asia also more and more important buying region for the product. With the current China ban on the Australian coal import, many sources say that it will be any soon. Many sources that we never know when it ends. But definitely each Australian have to find more buyers for the Medco. We're seeing in the last few months several resale Australian Medco finding way to South Asian, and I know that Vietnam and some Indonesian also have a booking on that. One of the reference from the plant, they observe the volume of spot transaction of premium hard coking coal for Chinese market. So we remove here India, Europe, South American, and we put here South Asia. Up to more than 200% year on year. So definitely this Chinese market and especially South Asian is nearest to the Australian. Very, very important. New destination market. But Australians have a hope to improve and to enlarge the seaborne trade volume. And because of the Australian still remains more than 60% of the market share of the seaborne trade. So the key for the supplier from Australia to find an alternative. India is a big consumer, European, but South Asian definitely very key for them in terms of this situation with the China and the Australian ban, and also We all know that this very crazy rising cost rate those days. Well, many people asking me this question, and I'm not the person to answer, but I'm trying to give my contribution here. I hope that can help people to hopefully us correct, so people can navigate the trade discussion and trade strategy in the second quarter of this year. So there are three things I note down here that the Asia seaborne met coal market will continue to face tumultuous second quarter as the low price environment looks set to stay given China continue absent from Asia coal. Secondly, is the price volatility in the first quarter. We also believe that it may feature in the second quarter. For some reason that there was a concern in Australia, and many people talking about those days with China ongoing steel production cuts and all of these new policy to more strictly control the reinforcements in China. So we're coming to another volatility. One very noticeable here is the weekly rate of met coal price climb higher. So bingo for the weaker grade coal miner, the relative activity as a result will be narrow. I put here two numbers so we can see that first time ever in the first quarter, the PCI relative versus PLVs reached highest number 99.5%, almost same price. Secondly, the semi-soft coking coal and hard coking coal on the foot also pick a very high number, 97%. So this will hopefully help us to see that the second quarter with more or less is not much different to the first quarter, but things can be changed if a policy change from China things. The trade pattern. Nowadays, the trade will be modernized, and we have many new trade pattern business model with support of the technologies and very talented traders. However, I would like to say with the Chinese mill and the coking coal price, how is the way people doing in the future based on current data and figure? They decide the trade pattern for the buyer and seller. So Chinese mill have a look to cut back on the cost and started procuring more and more product, such as pellet and lump. As you know that as a producer, if you can minimize the coal production, our chance for survival is much better. So producers are very smart today. So whenever way they can go, like take it and make it the best for the production cost. So what happens if more and more mills using pellet and lump? That coming to the less use of coking coal and coal. So we are having to pay attention to this. As when China moving, all impact will immediately effective. We have some in the fast market in have some data. I refer an idea that coking coal price are positively correlated with the premium for the blast furnace pellet. One of the trade pattern before we discussing the price or before we end the deal, and that if we are doing in this coking coal price, also pay attention to the blast furnace pellet. More or less, you'll feel some way how to do the best deal for yourself. One thing more, some of the POV and SCC, the spot of resale at China is more frequent. More and more sellers, they cannot keep the vessel waiting for too long. Many reasons. So the crew problem, the coal qualities, and all the demurrage costs arise. Many things. So believe a supplier and also buyer that are fighting each other to settle out this resale China cargo, so it can be affected to when you're dealing to offer the new one as well. On the PCI, things good for the seller, the seller's game. I mean, the very tight supply of PCI will lead to the price more or less will be decided more from the supply side. Besides for the on the screen trade, so we're talking about the off-screen trade. Buyers are very familiar with the long-term contract and the spot contract. So for the long-term contract, I just have on comment and believe that the buyer continue keeping the long-term contract with more like Australian supplier in the coming fiscal year. The reason is that the qualities from Australian met coal and also geographically for South Asian buyers still consider Australian size is the best choice for the long-term contracts. But for the sport business, there are some new factors. Some new platforms will have a trial. It takes some time, 1 year, half year, depends on the curve open or the platform testing facility with the new supplier. Where I mentioned from beginning of the slide that United States and Canadian supplier. All depend on price, but we'll try it. Because all producers also have besides the short-term memory, they also have a long-term. They want to have an alternative, and that alternative for the medical should be tested technically. So we'll see it's coming. So trade flow, the COVID-19 and the new policy between the countries also bring the trade flow a little bit flip those days. So we're talking about two trade flow amongst tens of trade flow globally. So Asia to Asia. So Australian focus as problem with China, Australian focusing more to Indian, and the sea region. And Indonesian, besides a very traditional Japanese spy, start looking into the sea region as well. It's making the Asia to Asia trade flows becoming more and more frequent in the coming times. Second is Western to China. So US, Canada, Russian, of course, but US, Canada will keep more priority to China at the moment. But when the price doesn't work, so Western decide to China also for flying to other region of the Asia. And they already done very, like the United States, they're doing very successful with India. And South Asia will be second name for them. I'm not going to steal more of your time, but before you leave, without this longer day today, so I want to put two things fully after my presentation. Two takeaway. You can take that. It's very general, but I believe the detail you know much better than me. But first, watch China closely. China policy. China chat pattern. And second, be positive in 2021. You are surviving today, even the very fierce COVID-19. So no matter, no other reason, keep positive and you'll be smarter in your coming trade. Oh, thank you. And I wish you all the best wishes and keep safe and sound in coming time. And hopefully our business all be successful in the 2021 in the coming years follow. Thank you. Cảm ơn.